Hey everyone, welcome back into the Everything Money channel. We appreciate you clicked on our video. We thank you for your support and of course our patrons. You know I adore you all around the world. Today we're talking about Gilead Sciences. Gilead Sciences is an American biopharmaceutical company. They're headquartered in California. They do HIV treatment, but the big news, Paul, is they've recently partnered with Merck to jointly develop a commercialized long-acting HIV treatment. There's some long, crazy scientific names. They specialize in HIV, and we brought this up because it's come up with our patrons in terms of requesting it, Paul. And then right off the clip, we do a little pre-show analysis, and I see a PE ratio of 650, yet a stock price that's half of maybe what it used to be. So fill me in on your thoughts on biopharmaceutical companies in general and Gilead.
So first off, whenever we do a company, we are starting from a very 1,000-foot view. I do not do any research on the company. And the reason being is, as a value investor, my job is to screen companies ahead of time, and I use the 8 pillars to help me screen. I don't care about the specifics. You might sit there and say, you're wrong. Fine, I'm wrong. And I'm sure I miss out on opportunities. But if the company doesn't make sense financially through our 8 pillars, I stop immediately.
Well, let me stop you there because we do get hate comments below because basically you're bringing up the 8-pillar financial history, not so much looking toward future growth. And we hear that as you don't understand, Paul. They have this down the pipeline. They have this coming. They're partnering with so on and so forth. And that's why you're wrong with your analysis. But tell it to me again.
That could be the correct. But at the same time, if the numbers don't make sense today, unless some astronomical jump in growth that's huge, and you might sit there and say, oh, it's there, I don't want to deal with it. There's 10,000 stocks in the US I can buy. Why would I sit there and waste my time researching every single minute? I don't care. What I care about is which companies are, as a value investor, my goal is to buy $1 for under 70 cents or whatever number it is. So if I don't see that off the dribble, I don't care. I might see something that's 90 cents or at $1, but if I know the company going, wait a second, let's see, maybe they have good growth prospects, then I'll look into it. Especially in this market, it's even hard to find companies selling for what they should be selling for, let alone the value investing metrics. So if you're going to go ahead and hate on that, more power to you. There are going to be haters, especially as we grow. But my goal is to start with an 8-pillar analysis, look at pre-screen everything. And if it passes that kind of field test for that, go to the next step, which is, okay, what does the future look like?
There are multiple ways to skin a cat, as Paul always says.
I've never said it before.
And if you like trading, we have Trader Mo here with the Bid and Ask Nation talking about the movement and trading behavior of Gilead Sciences. But first, Paul, let's look at the financial history of this company and where they're at.
So as you said, Seth, we got a 640 PE. We got a profit margin of 0.5%. But look, in pharmaceutical, huge gross margin. This is for every extra dollar they sell, how much is that going to the bottom line before all overhead? This is ginormous, and it should be in this business. Now, pharmaceutical companies, the most important thing is their pipeline. What's coming in? What do they have going? So as you do more research, if it passes our first 8 pillars field test, as you do more research, go find out what's in the pipeline. This news that Seth talked about is a pipeline news, correct?
Yeah.
Was that a good question to ask you? Or
Great,
I
love it. Yeah. Perfect.
Okay. So, first things first, free cash flow in the last 12 months, 8.2 billion. The last 5 years, the average has been 11 billion. Guys, this software does this all for you. It is making this as easy as possible if you look at the data.
If you're new to the page, this is the Everything Money software you're going to get on April 15th if you're a patron member. Our patrons have been frothing at the mouth to get a hold of this, Paul, and it looks better every single day. But yeah, this is the Everything Money software we're offering.
Dividends paid, 3.4 billion. At a 4.3% yield. So
nice
this is
dividend.
very important because you hear 4.3% and you go, oh, that's very nice. But what people don't realize is you have to make sure the company can afford it. And right now, in the last 12 months, they're only spending about 40% of their free cash flow is spent on the dividend. So it's pretty ample. In the last 5 years, they've had $11 billion almost. So it seems like they can afford this very nicely. Now, one metric I want to talk about. One metric, return on invested capital, 11% here. Now, this is one of the metrics that I might be replacing on the 8 pillars. And the reason being, I want to see how well they take their cash, their debt, and their equity, that's the cash they use to grow, and how do they generate returns on that. It should be above 10. I'm looking for 15. Is this bad? No, it's not bad. But at least, the previous company we had was like 1%. So companies that are able to take their money and go invest it in themselves and generate higher returns are going to do better over the long run. So this is one that's a little bit above the market should be. Because as Charlie Munger says, over long periods of time, a stock should grow about what their return on invested capital is, assuming you're buying it at a reasonable metric. Okay, this is not affected by by the price of the stock. So this is not, if it's a price of the stock doubles, this is not going to be affected. The price of the stock falls in half, it's not affected because the calculation is net income divided by capital lease debt, total long-term debt, and equity. So, and this is over the last 5-year average. This is my last 5-year average. And some of you will look at this and go, oh, my website says it's blah, blah, blah. Great. I look at the last 5-year average because you guys know me. I don't really like to do 1-year looks at stocks. So anyhow, that's getting kind of off the track. But the point is, I like this dividend. I like their free cash flow number. And I like this return on invested capital. Obviously, I hate these two X's right here. But I can get around them because we have to figure out why they made such little money in the last year.
You said profit margin is an X? No, profit margin is huge.
Yeah, profit margin is 0.5%. It's an X.
Oh, too bad. Okay, revenue
Gross
growth.
margin's huge.
Revenue growth over the past 5 years is our next metric, pillar number 3.
Okay, so 30 billion down to 25 billion. That's an X. Seth, look at this. They were at 32 billion here. So one of the things you have to understand when you go look at this company is why did they have big drops? Big drops in revenue, now it's increasing again. I don't know why. But this is part of the this is what the story tells you. Okay, why are they having these? Did they sell a division here? Did they sell something here? Did they lose a drug out of? Did they lose a patent on a drug?
Yeah.
There's so many reasons why, but these are the things to understand here.
Pillar number 4 is profit growth over the past 5 years.
And here is their profit issue: 13.5 to 123 million. That's an X. Now, this is a big drop from 2019. 5.4 billion down to 123. Something tells me there was here we go.
Tell me now. Tell me.
Guys, look at this. Last year, they had a loss of a one-time loss of 7.2 billion versus the previous year was a $2 billion gain. So this is the thing you guys gotta remember. You guys gotta understand when there's one-time charges, what the reason is. Because these things in the previous, this takes the company from a $123 million gain to a $7.5 billion gain. So this is why we look at the numbers here. I don't believe this number. It shouldn't be a 640 PE. What's the market cap of this company? I didn't even look.
Gilead reported a loss of $3.3 billion
When?
in the second quarter of 2020, compared to a gain of almost $2 billion a year before that. They attributed the quarter's loss to a $4.5 billion charge for the company's acquisition of the immuno-oncology company 47 Inc. This was published in July of last year.
Sick story. Now, their market cap, 78 billion. So guys, if you add back in that $7.2 billion write-off, that loss of $7.2 billion, they're selling for 10 PE.
Come on.
Because they're a $78 billion company, market cap, and they made about $7.5 billion last year when you add that back in. So it's about 10 point, what is that? Somebody do the math for me, 10.4 PE. Their free cash flow last year was 8.5 billion. They're at 78 divided by 8.5. That's a 9 PE essentially. That's a 9 price of free cash flow. So this is a company that you might want to ignore. You are going to ignore. And this is when people tell me, oh, you're too anal about the numbers. No, I'm not. I'm looking at the numbers going, wait, you got to understand what that 7.2 billion, you only told me 4.5 billion of it.
Yeah.
I would be concerned if every year there was a massive write-off. Right? If every year there's a massive write-off, which if you go back in history, it's one-time gains usually. I'd be concerned if it was a massive write-off every year. That's more of an ongoing problem the company has. So we have to figure out what this is. What'd you say it was? What was the $4 billion write-off for?
They acquired someone.
Yeah, they acquired.
No, that wouldn't be an acquisition.
That's what he said.
They said it was a loss for a charge for the company's acquisition of 47 Inc.
Okay, so what happened is in the past they bought 47 Inc. Was it last year they bought 47 Inc?
Yeah.
Are you sure?
No.
Okay, why don't we look that up real quick? Can somebody look up when 47 Inc. was bought by Gilead? So what usually happens, guys, is like, for example, if you go look at years ago, Microsoft bought Motorola. Years later, they're like, we paid too much. They did a $7 billion write-off. That's what these things are. They'll write off their equity. They said, okay, we made it. Warren Buffett this
Berkshire
year.
Hathaway.
Berkshire Hathaway. He had $11 billion or something like that write-off on some business that he bought, saying, I just paid too much. And I'm writing off 11 billion of it.
March 2nd, 2020.
That's when they bought it?
Yeah, just last year.
Okay. Well, I'm confused as to why it was maybe it was one-time charges due to the That's interesting. Okay, what's the other charge?
Revenue fell last year to 5.4 billion in the quarter, down from the previous year.
Okay, but that's not that. Remember, guys, we're looking at the one-time, the 7.18 billion in other income and expenses.
It's a good time to go and look at the 10K. Though.
And you look at the 10K, pull it up. By the way, we will have a link to all the 10Ks at some point this year in every single company, so you can click on it and go do your research right there directly off the SEC website. You just go to sec.gov, top right corner search bar, type in GILD, first line will say Gilead Sciences, click on it, and then you just go search for the document and you find a 10K. But we're gonna find that for you. That's the point of it. Now, I'm liking this company more now.
Oh.
Yes, because it was written off big. I mean, look at the stock price. It's dropped a lot probably because of that.
Well, that's what I was going to tell you. In 2016, the stock was $102, and currently it's $64.
Yeah, and in December 30th, it ended at $56. Okay, so let's go to the balance sheet. Total current assets is basically cash on hand at 31 billion. Total current liabilities at 9.5. I mean, this is incredible.
Wow.
Yeah. And look at this. Their total long-term liabilities is only 33.9 billion. Total liabilities is 43. So they almost have enough cash on hand. They have enough cash on hand to pay off 75% of their debt, which is awesome. Now, free cash flow.
How about those shares, which we skipped as pillar
We
number
skipped
5?
the shares.
Yeah.
Oh, that's right.
We want our share count going down.
1.32 billion down to 1.25 billion. Now, let's make sure that's actually accurate. What's the share price right now?
The share price is $64.
Perfect. This is actually fixed now. So this is the right number now. 1.32 billion down to 1.25. Check mark there, guys.
Okay, free cash flow, Paul, you want to look at. This is cash from operations minus capital expenditures, pillar number 7.
And of course, Uncle Paul makes everything so easy for you people.
Of course.
Join the Patreon. We'll explain at the end of the video. You'll understand how to get the software. But right here, cash from operations less capital expenditures. Now remember, capital expenditures are used, free cash flow used to pay dividends, make acquisitions, pay down debt, things like that. So it's important. That's what I really look at over PE. That's why I want to change the PE out of the big pillars, because look at it right here, 640 PE, completely misleading.
Yes.
Cash flow is hard to mislead. It's not impossible, but it's hard to mislead. So here, I added a line to the income, the investing portion. This does not exist in actual financials. 17.6 down to 8.16. That's an X. But again, guys, another reason why you need to go figure out why was it so different in this 3-year stretch versus here. You got to understand that. It is still an X, but in the last 10 years, so here's what I want to do actually, Seth. I'm going to take 8 billion as their average. This is still selling for about a little under 10 times free cash flow. Because if you remember, the market cap of the company was $78 billion, right? The last 3 years, they've averaged 8 billion a year. So you divide that by 8 billion, and you're at 10.75, 9.75 free cash flow multiple. We want it to be under 20. So we're at half. I think this is a company to look further into.
Interesting.
Have you talked to our fathers about Gilead?
Yeah.
What do they say?
They're not in love with the pipeline.
Well, they're not HIV doctors either.
No, I've talked to one infectious disease doctor. They said they're a good company. I mean, they are the virus person of the world. But, I mean, nobody's jumping up and down for their pipeline that I've spoken to.
Okay.
Yeah. And I did talk to an infectious disease doctor, so.
Okay, but I like the numbers of this. This is all about doing more. So now we've looked at these numbers and the 8 pillars. Let me look at the 8 pillars. Look at the X's on this 8 pillar thing. I mean, this is crazy. Look at this, Seth.
Mm-hmm. They're all over you.
I mean, this is terrible. This is absolutely terrible. And here's the 8 pillars for you with the software. But guess what? I'm ignoring that. I'm ignoring that. I'm ignoring that. These should all be checks right here to me.
Mm-hmm.
Yeah, so I'm looking at it going, personally when I did it, I got 6 checks and 2 X's. And I don't worry about revenue growth if you understand the story about why the revenue fell. The revenue could have fallen for a multitude of reasons. As long as you're not overpaying for it. You know, back in 2016 or 17 when revenue was very high and you were buying the company, part of your due diligence would have been to say, okay, is this revenue sustainable? And if they had a patent expiring in a major product, you would have known, okay, this revenue is not sustainable. I got to be careful here, right? And you'd have seen your stock price fall very great by a lot just because of that. So this is all part of the peeling out, telling the story. The 8 pillars tell a story, and doing a little bit of peel back will tell you more of what we need to do.
Let's head over to Dr. Momentum. Trader Mo is going to talk about trading this company.
Mm-hmm. So totally separate this from what Paul was talking about because it's totally different. So I'm kind of looking back 2 years. If we just stay in this range, this company always sits and just consolidates mostly between $60 and $70. Here is when we had all that vaccine talk. Here is when competition came in, and we kind of just settled back in this $60 to $70 range. Now, what I want to say for that is this is why you kind of pick your basket of stocks and stick with them, because this tells you a story. So if you didn't look at, you could have just looked at this part of the chart and that's it. But for me, I'm zooming out 2 years because I am familiar with this company and I see that they kind of just sit in this range. So maybe this isn't the company that you go in and it's the best thing to trade on a daily basis or to go long term on. Your returns are not going to be that good. Like Paul said, there's 10,000 other companies out there. If you're going to do something long term and you're looking for good growth, go find some other kind of pharmaceutical company. Look at an AbbVie, look at a Biogen, something like that. For me, this is not something that I'm going long term on though.
Paul, final take on Gilead Sciences.
It's not a no for me. It's a let's go dig deeper. This is a perfect example. Let's go dig deeper because I like the fact that there was a big loss written off last year that probably scares people who are looking at PE going, oh my God, the PE's and our first reaction was, geez, oh, Pete, what's going on with this PE?
Yes.
So that's good.
If you're drawn to this, looking at the math, not following hype, and taking a more disciplined approach to value investing, you can join our Patreon. The link is in the description below. You get tons of information from us. You get an amazing Discord channel where you can talk with people like yourself from all over the world. That channel is just lighting up all day. You can go in there. You can ask about this company. People who know a lot more than perhaps we do definitely know a lot more about this company. We'll give you some guidance on when to buy, when to trade it. And it's just incredible. We're giving away 2 Teslas this year. By entering the Patreon, you automatically get a chance to win one of those. So 2 of our patrons and our followers will be driving Teslas this year when we hit 50 and 100,000 subscribers, which is going to happen. So exciting, Paul. So in general, if this speaks to you, join our Patreon and you'll become a member of our Bidnass Nation. Yeah. And we'd love to have you. Paul, show that real quick. Show that.
Everythingmoney.com. Here are all the things you get, guys. The 8 pillars, all that software I was using, 10 years of financial data. We're adding a stock value calculator, a real estate calculator, a house flip calculator, momentum trading, stock screeners, a Discord community. There's over 1,500 people in this Discord right now talking every single day about all these companies.
But that price, Paul.
The price used to be 8. It's no longer 14. Now it's 17. It's on its way to 49 at some point. Look at all the stuff you get. Look at our competitors and their prices. Which ones make sense, guys?
Yep, this is a no-brainer, guys. If this speaks to you, if you've never joined a Patreon, now might be the time. Take a look at our peers, look at the reviews, join our live streams. You can see all our patrons talking all about their wonderful successes and the amount of money they're making.
The most common thing we get are messages from Patreon saying, you've changed my life. We get it all the time. We just share them all the time. We're just like, somebody else said, somebody else said, somebody else said. It's just everybody literally saying, you changed my life. And I'm like, well, I didn't change your life. You went and took the initiative to go change your own life.
That's true. That's our take on Gilead Sciences. Tickle that thumbs up on the way out. We know, Paul loves that. And join us for more analysis. Love you guys. See you.